Let's go to Mitesh for his mid-morning trading ideas. Mitesh, your number one idea, or your number one mid-morning trading idea is Titan. Why are you hot on Titan?
Oh yes. See, the breakout was very strong, which happened actually on Tuesday. Yesterday was a pullback day. I think on the intraday charts, my sense is that the pullback is complete. The stock will possibly resume the up move which started on Tuesday, and I am looking for the stock to hit all-time highs or the recent highs of 255 on the upside, and this one can be bought with a stop below 225. The next one is Adani Enterprises. Actually, the stock moved a few days back and then has been sideways. There is a chance of minor pullback, so I'm keeping a slightly tight stop loss over here of about 234 and looking for price targets of 259. Though I would, for somebody who's a positional buyer, I would even suggest that the pullback should be used to add on to positions. The last one is BHEL, which was again an idea a couple of days back. Went through a few days of consolidation, is breaking out again on the intraday charts. Can be bought with a very close stop loss of 232 and a price target of 245.
Aditya Birla Nuvo is one stock which is holding up in trade. You've got good traction coming in for IVRCL infrastructure as well. And of course, the top notch is the retail name Pantaloon, which is holding up by about almost 5% or so. On the flip side, there is some weakness coming in for the Nifty 50 names. You've got a Gale, JP Associates, ONGC, as well as Wipro and DLF in there. Ashwani, which IT stock is looking the weakest to you right now?
I don't think I am looking at IT stocks in that manner, because the market seems to be up. Again, like I say every day, that they will probably move sideways, will not break down, unless the market starts moving lower. If you just want, just a comparative study, Wipro is the one that's looking the weakest. But again, there are chances of a false breakdown happening there. So that could probably get down to 360, 365. They are sideways and probably waiting for the Infosys results. And decisive moves are likely to happen only post that. So right now there are no trading opportunities. Most of them remain sideways.
And it's often believed that 80% of the stock at any point in time, they moved in line with the broader market direction. So when market has rediscovered momentum, you want to be part of that 80% club. There is no point in being part of that minority club which is underperforming, be it IT or maybe some odd consumer names or maybe some key metal stocks. The market in the near term has rediscovered momentum. There is money which is backing the rally, and globally there is a flavor of risk on. Now this is a very potent combination, so there is no point in trying to be a cowboy and try to go against the trend, because if you go against the mob honestly is going to rob you. So be with the momentum, and the momentum in the near term is upside. Having said that, I think the flavor of the season, apart from risk on, is investment and to some extent retail and all those government-related businesses. And to my mind, honestly, markets are giving this government one more chance, or I would say last chance. The next 2 or 3 weeks after the presidential election, if we don't hear something serious from New Delhi, then I think markets do run the risk of getting permanently derated. As of now, there is hope trade. If this hope trade does not get translated into some kind of a material action or activity from New Delhi, then the LNTs, the BHELs, the GMR and the Lancos of the world, they automatically will get derated, and then we really could be in a spot of bother, because consumer names are growing, but they are expensive. Discretionary spend is coming under pressure, so auto stocks, they run the risk of underperforming. Then you're pretty much left with consumption or investment names. When if we don't hear something in next 3 or 4 weeks, like I said, then the investment-oriented businesses, they could come under pressure. Ashwani, do you think this market is giving the current government maybe one more chance, or maybe the last chance? If we don't hear something in next 3 weeks, next 4 weeks, then this market will get permanently derated?
Well, who is participating in this rally? Just a few FIIs and 3,000 people in Delhi and Mumbai. So already the vote of confidence is not there from the public or, broad institutions. Look at the mutual fund flows, etc. So we are still in a range, and we'll remain in that range. In case the market, the government does not deliver, we'll get back to 4,700. And then again, you will find, reasons for hope, and you will come back to 53, 54. So that will be our life. If we have to break out and get into some sort of a bull market, then it needs, some solid reforms coming from Delhi. Otherwise, we are condemned to this range.
Mitesh, what about scenario 2? Scenario 2 is that we break below 5,000. For markets to break below 5,000, what has to go wrong?
Well, I think it could be the news flow in terms of results, which are set to be announced. I think that could be possibly a big dampener, though I think that's a scenario which I'm not really contemplating for the time being. Looking at the way Nifty is shaping up, the internals are shaping up. There could be corrections, because we've not had one or any significantly deep corrections apart from the fact that we did go into consolidation for the most of the June. So I would still suspect that, as long as we are above 5,251.80, I don't think we should even look at levels below that. So I think any declines to 52.20 is a buying opportunity for me. The conviction from this, on this kind of trade comes from the fact that the momentum indicators, the long-term indicators are very steady in their rising mode. Also is the fact that the market breadth has been positive despite of the fact that the indices might be consolidating for a number of days after 1-2 days of hectic activity. But I think the breadth is one which lends me a lot of conviction, and that was one of the reasons we had maintained an upside bias despite the fact that for the entire month of June we were just doing nothing, practically doing a 100-point range.
Just about everything and anything in the retail space is up now. Coupon retail, see, we've got trend, we've got shopper stop. So, attach the prefix or suffix retail and that stock is on a tear today. Shopper stop is up 9%. Some of these stocks are liquid, under-owned, so I don't think you should get too tempted to buy some of these stocks. I also want to look at Provoke because 50 days ago Provoke had almost become a penny stock, and there you go, 7% up. So pick up a favorite retailer, Aisha. It's up for grabs today, up 10 to 15%.
Yes, it is, but don't know whether after the 10.5% up move, where is it, or rather, where's the opportunity to actually get into these stocks? A gap up start there, and they're only building on to these levels as well. However, there is some weakness coming in for a couple of these oil and gas names, the likes of GAIL as well as ONGC, which continues to be down. ONGC now at 283 levels. Mitesh, a quick call on ONGC?
See, I think, one thing is that ONGC had a FPO offer around 292 odd levels. I think that's a supply point. But also is the fact that in the recent rally, I think, the level of 293, 294 was tested 4 times and we didn't get an upside breakout from that. So I think the next momentum would come once the stock starts trading above 294 levels. 310 is a good target over here, but that might take some days given the fact that the stock recently, that is to say in the last 2.5 weeks, it's rallied from levels of 260 to about 290. It might take a few days of consolidation, and this is not a very high beta stock, but I think the big trigger will happen once the stock starts trading about 294, and then you could see possibly a very fast move to 310 or possibly more on the upside.
Ashwani, is it time to be slightly more creative and initiate some pair strategies? And the reason why I insist on this thought is because if you look at sectors, Maruti is doing well, Tata Motors is underperforming. Similarly, in the capital goods space, L&T has been a marked outperformer, BHEL is stuck in a range. In the metal space, Tata Steel is doing okay, but SAIL has been stuck in a range.
Yes, Tata Motors is underperforming, but it's not breaking its intermediate lows of about 225. See, the point is, till the market bias is up, these weak stocks will not break down. You make money when something moves in your favor, not when something goes flat. So, if 80% of the stocks, 90% of the stocks are moving up, I don't think you'll make too much money by betting on the downside. Say, by some stretch of imagination, Manmohan Singh comes with a good package and the market goes to 5,500. Then what happens to your bearish positions? You have to wait for the market to turn, and turn significantly to initiate bear strategies. I don't think, while the market is moving higher, you should, try to do these over smart trades.
Ashwani, like you pointed out that in this current uptrend, the participation has been very low. Foreign institutional investors have participated, retail is out, and HNI investors have been on the sidelines. So for those who missed this uptrend and are now convinced that they want to jump back in, what would be a good entry point?
First of all, they have to be clear that things may not work out. So, having said that, if you can take a 100-point hit on the Nifty, that is the time to enter. And on any kind of dips, say any 30-40 point type of dip on the Nifty, keep a 5,200 type of stop and then try to enter the market. keep a defined target that in case something positive comes and the market suddenly shoots up 150, 200 points on the Nifty, that should be their current upside, because this is not 4800. So whatever they buy should be bought with a stop, because if the market turns, then it could be a long way down, 500-600 points lower. So this they have to keep in mind, that we are probably 80% done with the rally, maybe 20% is left, and if you are playing the last 20%, it's always a risky strategy.
Ashwani, let's revisit BPCL, because that's a stock that you like from a long-term basis.
Yeah, BPCL, continues to show strength, and chances are that, on all dips, it should be bought. It's not the kind of, jubilant footwork which will keep running up 100, 200, 300 points on a daily basis. But chances are that if you keep buying it around these 720, 740 kind of zones, you will finally get to 900, whenever some diesel reform happens, which is inevitable. So, it's a buy on dip type of stock. All of these stocks are now not looking as much at the crude price as before. Crude rallied $15 from the lows, but these stocks haven't really corrected, which means that there is something else that is driving these stocks higher. So on all declines, BPCL remains a buy.
Mitesh, let me ask you the same question what I asked Ashwani. For those who have missed the rally in the month of June and are tempted to come back, what could be a good entry point?
See, I think for somebody who is looking to enter slightly aggressively, I think, and I'm not sure whether we'll get this dip or not, but I think around 52.20 is my preferred level. I think, there the risk reward is pretty favorable. You can put a 1% broad stop loss on the index, even if you're trading stocks. And as long as we are above these levels of 5,200, I think we will keep coming back. And the good part is that while the index might not give you absolute movement in the terms of, big gains of 5-10% kind of thing, but even if a 4-5% move happens in the index, you will see stocks go up by 10 to 15%, possibly even more. So 5220 is the preferred entry point, and as I mentioned, I'm not very sure whether we'll get that first or whether we'll go to 5400 first. The immediate bias is on the upside, but there's always a possibility of a 1%, 1.5% dip which can happen due to profit booking on stocks or some bad news or some global event. So that's a 50-50 call, but that's the best entry point.
Mitesh, for a typical retail investor who has not been in this market from last 3 months, has been out of this market, has burnt his fingers, if the intention is to buy one lot, which could be a low risk, high return idea, what would you nail it down to?
I think BHEL sounds very good to me. It is a stock which is slightly underperformed in the capital goods sector, but the entire sector has been showing good collective strength. This is a stock which now has got into the sequence of higher tops, higher bottoms. It's gone through big correction from levels of 300 to as low as about 200, now getting back into a corrective rally. So with a very 10 rupee kind of a stop loss, I think this is a stock which can still give you about 25-30 rupees on the upside if somebody takes a few weeks kind of perspective.
Ashwani, same question for you as well. Let's address this question, or please address this question keeping in mind that you're addressing it for a retail viewer. For a retail viewer who is back and has an appetite to buy just 1 or 2 lots, what could be a high risk, high return idea?
On individual stocks or in the index?
Individual stocks. Someone who's intending to, let's say, buy 1 lot, has been out of the market from last 3 months, has made loss and now wants to cover up some of his losses.
See, there are always ideas in the market, and if you are trading individual stocks, your horizon, it's better to keep it shorter. I mean, don't buy individual stocks as a replacement for the equity that you may have bought, and keep holding on till the market gets to 4700. That's point number 1. That a future strategy is a speculative strategy. It's not an investment. So if you want to immediately buy and 1 lot or something, Hindustan Levers post touching 437, 438 is now bouncing back. You have 7-8 rupees of a stop loss, and chances are that it should finally retest levels of 460, 465. So there's a good 1:3 type of a risk reward. So this would be the strategy that you can buy. It's reasonably safe. the stock does not get impacted by global news flow, etc., and would give you a decent return even if the market starts declining.
Mitesh, how about Jet Airways? That's seeing some open interest gain this morning.
See, we were looking at price targets of about 400 on Jet. It met them, even closed above them, and completed a minor pullback to, short-term intraday breakout level. If I am an aggressive trader, I think the best strategy which I think I'll follow is possibly keep a stop loss just a rupee below today's low, and then look for the up move to continue. Again, there's a chance that we might get an upside break, which is similar to what I commented on McLeod Russell. And I think, therefore, these are risky trades, but then these are high momentum trades. So just keep a stop below 399.5 and look for a price target of 425, 430, even possibly higher than that.